Investors are getting cautious ahead of Sunday's first round of the snap elections in France, so the euro is trading under escalating selling pressure. While markets are speculating about the future of the European Union, the US dollar is advancing across the board. The greenback is tightening its grip on major Asian currencies, and the yen and the yuan. As China has recently shown tolerance for the depreciation of its national currency, the yuan fell to a 7-month low today. Moreover, Beijing is still unable to allay market fears about the fragile recovery of the Chinese economy. In this regard, the situation will most likely get worse. Importantly, meanwhile, China is facing a tough challenge in two trade directions at once: the United States and the European Union. As for US-Chinese relations, experts do not see any good omens for now, at least until there is more certainty about the future American president. At the same time, the EU authorities plan to introduce state duties on the import of Chinese electric vehicles by up to 38.1% in July. Moreover, this week, another 19 Chinese companies came under EU sanctions for collaborating with Russia. Political events in the Eurozone do not inspire much optimism. If the elections in France strengthen the position of either Marine Le Pen's far-right party or the left-wing alliance, this outcome could greatly shake up not only Paris, but the whole of Europe. And of course, it will have a profound impact on the financial markets. The first election round will take place on Sunday, and this looming event is bearish for the single European currency, weakening it against rival major currencies. The euro-dollar pair fell to almost a 2-month low, testing the level of 1.0887. The volatility of the main currency pair is quite low. It already indicates stagnation. Moreover, today the instrument broke through its multi-day support level at 1.07. Based on recent price fluctuations, our analysts suggest that the euro-dollar pair is likely to trade in the intraday range between 1.0670 and 1.0750 in the daily time frame. Therefore, the momentum strategy could be applied to the euro-dollar pair. It means entering the market in the direction when the price quickly and sharply exits the trading range. Besides, momentum trading involves opening positions during a period when there is an increase or decrease in an asset in the light of the release of a certain economic statistics or amid a news background. You can also learn more about the impact of economic reports on market quotes of popular currency pairs from our regular traders calendar. For example, data published today on consumer sentiment in Germany and France showed a decline. Moreover, the leading German economy in Europe and the third largest in the world did not live up to market expectations. The corresponding index dropped by 0.8% to minus 21.8 points. No wonder the euro reacted negatively to this report. In addition, ECB policymakers continue to say that the regulator may cut interest rates 2 more times by the end of the year. Thus, Bank of Finland Governor Olli Rehn again underscored the possibility of 2 more rate cuts this year. If this topic is further developed in the comments of other policymakers, then we should expect another fall in the euro, and the US dollar in turn will be able to notably strengthen, thereby reviving from stagnation. Moreover, current statements by Fed Reserve Governor Lizzie Cook and Michelle Bowman still indicate that the US Central Bank does not intend to rush with the rate cuts. Firstly, the economy remains at a risk of rising inflation, and secondly, the first presidential debate between Joe Biden and Donald Trump will be held on a Thursday, and they can also affect global markets. Today, the US dollar index, after hovering for some time at 105.60, benefited from the weakening patterns in its basket of currencies. Meanwhile, markets remain on the sidelines awaiting US inflation data, which is due out at the end of this week. All in all, the US dollar index is still trading in the same narrow range of 105.60 to 105.90, where it has been locked for more than a week. Taking into account the wait-and-see mood, our experts consider it most likely that the instrument will move towards the upper border of the trading range. The situation in the oil market is also changing in baby steps. From the point of a technical analysis, nothing radical has happened for the fifth day in a row. Although the American Petroleum Institute reported a rise in the U.S. oil inventories of 0.9 million barrels last week, the Brent price reacted only with a slight move in the range of 84.4 range of $84.80 to $85.70 per barrel. The oil market is trading with a low volatility as investors are waiting for similar data from the U.S. Department of Energy. According to forecast, the report may show not an increase, but a decrease in inventories by 3 million barrels at once. Perhaps this negative outlook is holding the market back. If this forecast comes true, then there will be an explosive jump in oil prices. Now, oil is already moving at the peak of the upward cycle. The level of 86 serves as a resistance, and the bulls need to hold the price above this level for a new round of growth. Otherwise, the market will continue to trade sideways. You have watched a review of global financial markets for today, June 26. Keep close tabs on the global markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online tomorrow.